Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on an active Friday morning in the gold and particularly silver market, where last night we saw the price dip down as low as 63.90, has rebounded since then. Although what's interesting about some of these situations is that things happen at different prices. We've seen that certainly over the past couple of months, and we're seeing it now in the inventories. Gee, I don't know, Sean, I don't know if you can, do you call it a drain on the COMEX when on one hand we still have more metal in there than just about any other point in history aside from what came over from London to New York last year, yet certainly in the context of what's happening where London and India hit a shortage and then China was already reportedly on the low side before they had problems. And we'll get to metal leaving there. So a lot happening. And Sean of Dolly Varden Silver, who also had some new drill results out yesterday that we'll get to. But Sean, how are you doing today, my friend?
I'm doing great, Chris. I'm really happy to be here with you today. It's good to hear your voice.
Yeah, someone told me I'm calming when they're worried about silver, so hopefully that's the case. I don't know if everybody feels that way, or sometimes my dog would disagree, but quick look at the pricing. Here we see silver, the future is 75.72, the spot price 76 bucks, so still in backwardation, which has been the case in recent times, although there's the real amazing part. See the futures below $64 last night. And Sean, and I'm going to recap. I mentioned I was starting to write my column right before we began here and was trying to keep track of this. It's been quite a week. Apparently, even the investing.com chart is having a hard time recapping the action. But basically, last Thursday, the silver futures in New York were above 121. I think it was 121.76 the high. Then we get down as low as 71.60. So from 121, let's call it, to below 72. It's basically a $50 move between last Thursday and this Monday. And then hopefully we can get it. There we go. So there we are at 120, then goes down below 72, then back up to over 90. So we just had another 28, 29, $30 drop again this week and still bouncing back up $10. So first of all, any thoughts on any of that, my friend?
Yeah, lots of thoughts. It started a couple of Fridays ago with our last Friday. Feels like a lifetime ago now.
Just
Uh,
last week.
it's just last week. Um, and look, Chris, I have to take a step back, and I have to look at the move it's made, right? From $25 to $120. Like that's a pretty big move, from April to the end of January. And from my perspective, we were running pretty hot there for the last 2 months. And I think this is a really healthy correction. Um, do your charts show the 50 and 200-day moving averages?
Yes.
Because I always find
Give
like
me a
looking,
moment on that.
yeah, no worries. I always find looking at those put things in perspective. Um, and again, like, I always like to look at the reasons why, right? And again, I'd love to hear your take on my logical, like, trying to use empirical evidence and, the price moves and now how do we explain this? Is it the CME? Is it, just an overhot, over leveraged market? Is it a more hawkish Fed? Like, as I'm grasping for why are we seeing $50 swings in a metal where the old high was $50? How are we seeing a $50 swing in a week? Um, but is there a logical explanation for this volatility? And again, one of the things I think about, Chris, is I always think about, there's a very, very famous speculator that you know, Rick Rule, and he says, the cure for low prices. The cure for high prices is high prices. And I as a miner, I can't get away from the fact that silver at $85 is 1,200% more profitable to mine than when it was at $25. And so that's something that I
Sean, apologize for interrupting, but can you just walk through the basic math of how that is? I know some people are very familiar with it, but some may not understand what you're saying there.
So look, as an industry, how we define operating costs is we like to throw everything in the mix, right? And so we have a term that we refer to as the all-in sustaining cost. And that's essentially describes what it costs to mine, whether it's a pound of copper, an ounce of gold. Here we are talking about silver. So the average ASICs, all-in sustaining costs for a miner, and this is across the board through various projects, is call it $20 an ounce. Okay, and that's where it was, that's where it was in Q1 and of Q2 of 2025. And so when we were in an environment there for many years where the price of silver was $16 or $20, Chris, it wasn't economic to mine silver. So there was no silver miners, and that's where you had lead miners and zinc miners that, oh, they happened to produce a silver byproduct or a copper. Silver came out of a copper mine. Nobody was actively looking to mine silver. There was no incentive to. Okay. And then we moved into a price environment where we went to 25. And for the first time, there was an incentive to mine silver. Now, somebody could argue, oh, there's this mine up in Alaska that you can mine at $10 an ounce. Okay, but I'm talking about averages. I'm thinking about things on a global basis, right? And that one mine is not going to fill the, you know, 100, what's the annual demand now, like a 1.25 billion ounces. So that one mine that's putting out 4 million ounces is a drop in the bucket. But getting back to my point here in your question, so if you look at $5 being the spread, $25 is what miners were selling silver for in April. $20 is what they were producing. They were making $5 an ounce. At $85, you know, they're now making $65 an ounce. So the spread there is 1,200%. And so I just think we're in an environment now where it is very, very, very lucrative to mine. How I'm trying to play that, right? And I'm here as an investor and as a speculator. And for me, where the opportunity lies, like I could go and I could buy silver today, and it's a pretty good deal. It's what is it, $75? Or I can go buy a silver miner that's mining, and that the market is pricing that miner as if silver was $35. The market has not caught up to this new price. And part of the reason is the market is looking for consistency. The market hates big swings and volatility. So the market's not going to price a stock based on $120 because it hasn't lived there long enough. So the market's looking at two consistent quarters, right? And where has the price? And so that's how the market plays these things. But for investors and speculators, the opportunity is these silver miners are trading at a fraction of their value. And I'll give you some examples. So last year, the price of silver was up 300%. But the silver miners were only up 200%. And historically, if we were in an environment where the price of silver was up, the miners would outperform the metal by 3 times. If the metal's up 300%, the miners should be up 900%. And that's how and it's again, because just because the metal went up 3x or 4x, the profitability is 1,000% more. And it's because of those margins. And so I don't know if that does that answer your question, Chris?
Yeah, it does. So, I mean, basically, maybe even a simpler way is if you take silver from 25 to 75, you add a 3x versus if cost of production is 20 bucks and you're making $5 an ounce, up at 75, you're making 55. So you got 11x in the minor leverage versus 3x in the underlying price. And Sean, we will certainly come back to that, although a few other things promised. First of all, to one quick answer to a question you raised in there, not that one, but is this about Warsh coming in, who's going to be more hawkish? Here was reported Trump said he thinks Warsh understands he wants lower rates. I don't, I think there's a rock outside that understands that Trump wants lower rates. He said he thinks they should be 1% or lower, and here would not have gotten the job if he said he wanted to raise rates. So in terms of did that drive silver 30 bucks lower last week? I would say not. And one quick comment on that, Sean, here is the interest rate curve as priced in by our Fed futures. It's amazing. We're in this bucket right now. And even as far out as the Christmas season of 2027, market's still only pricing in two 25 basis point rate cuts, while Trump says the guy would not have gotten the job if he wasn't going to cut rates. So I'm wondering what happens. Maybe, hey, maybe there's a problem with him getting confirmed. But if we're sitting here in July and Kevin Warsh is in there basically telling Nick Timiraos how they're going to lay out getting rates down to 1%, certainly that would affect the metals. Although here's the other thing that I think people really want to see because as the price dipped, we saw a surge last week on the retail level of people going out and buying silver, which I called a dealer right before we started. He said it's quieter today, but Stephen Gleason of Money Metals had already mentioned that in January we eclipsed COVID levels. So, somewhat of a retail panic. Certainly, we've seen that dynamic shift where it was primarily selling. Now we've seen buying coming in larger amounts. Here, Sean, I think I may have asked you this before, but in the industrial Chinese market, there's 36 million ounces backing that whole thing, where most of the silver is actually used. Although that was 36 million as of January 16th. And Sean, would you believe that here we are on January 30th, down to 30? Actually, if you update that to today's data, which we may have, not in this one, but it's actually down to 27 million ounces now. So we're seeing, and there was a big outflow yesterday in China, and at the same time, I don't know exactly what you want to call this, where we're here, we just went under 400 million on the COMEX. So we're right here, which aside from what came in last year is still, tied with the peak for what we had in 2021 when there were problems in precious metals back then. You had deliveries and then you had the silver squeeze. So we're still at a high point, yet you can see that metal started coming out right when LBMA got its teeth kicked in after India had a shortage, and it's also accelerated since January of this year. And again, we had large withdrawals in the past week, so prices going lower, yet you're seeing some of the consequences. I may add that the lease rates are also getting tighter. And Sean, anything you could say to the tightness or signs that you've seen thereof?
Well, what I want to just highlight here is just, I was talking about, we were in all this volatility, right? And for the investors who are looking for levels, where do I go out and where do I allocate more to this position? Where do things typically go? And so I've got three moving day averages that I want to highlight here. Okay. So I want to start with the 200-day moving average, which is at 49.30. Okay, so the 200-day moving average is the average price for the last 200 days is $49.30. The 50-day is 76.04. Chris, where are we right now on spot silver? Aren't we like,
We are at on the spot silver. And I'm digging up, I'm striking out, but I'm gonna find your moving averages chart. We're just under $76, and I'm gonna see if I can get you that
well,
chart.
and you know what, my experience has taught me this is very, very typical. Like when you have a big move, um, and we come from, if you go back to late November, silver is $50, and we've gone from 50 to 120. And so that's a big move. We're digesting the move, and we've come back to the 50-day average, and we're bouncing in around that average. And so if you're somebody who is not exposed to the metal, this is a decent entry point where you dollar cost average in, you maybe buy 25% of what you're looking for. If the price does go down to the 200-day moving average, which is around $50, you back up the truck and you go all in. Um, what I want for people, Chris, is I want them to get good, reasonable exposure to the metal. I don't want people running out and paying $120, even though I think ultimately the price is going well beyond that. Again, I go back to your original question. I think the run that we had was too fast, too soon, and I am celebrating this pullback.
Well, I can understand that because if you just look at the price alone and say, hey, we saw what happened 1980, 2011, it's one thing. But I mean, now we have China and the Trump administration. They're going back and forth with who's got the bigger strategic stockpile. And Sean, I do want to get to your results in a moment, although there's something that I think would be important for people to see because now that they've decided they're doing the critical minerals, I mean, they have the full press tour out, and there was something rather shocking that JD Vance said yesterday. So this is 3 minutes long, but maybe you might not watch the whole thing. But there are a few key parts that I'd love to hear your comment on because this is, I mean, apparently it's going to affect you and Dolly Varden and a whole bunch of other companies in the silver industry if we have production pricing floors that reflect real world fair market value, which to uphold price integrity sure sounds like they are suggesting we're not at that price yet, but let's hear what he says.
The value chain. We've convened this ministerial in an effort to accelerate that shared work. So this morning, the Trump administration is proposing a concrete mechanism to return the global critical minerals market to a healthier, more competitive state. A preferential trade zone for critical minerals protected from external disruptions through enforceable price floors. We will establish
You hear that? We're now not just we hear Trump administration is thinking about, they are talking about price floors, which is intriguing.
reference prices for critical minerals at each stage of production, pricing that reflects real-world fair market value. And for members of the preferential zone, these reference prices will operate as a floor, maintained through adjustable tariffs to uphold pricing integrity. We want to eliminate that problem of people flooding into our markets with cheap critical minerals to undercut our domestic manufacturers, because we know, of course, that as soon as they've undercut our domestic makers, the domestic markers, they leave the market, and the people who undercut them then jack up the price to a completely unfair level. We're going to fix that problem. Together, we want members to form a trading bloc among allies and partners, one that...
And Sean, we had Vince Lancy, who's talked about a form of silver OPEC for the past couple of years, which now we hear JD Vance essentially confirming.
Guarantees American access to American industrial might while also expanding production across the entire zone. The benefits will be immediate and durable. Regardless of how much material flows into the global market, prices within the preferential trade zone will remain consistent. Over time, our goal within that zone is to create diverse centers of production, stable investment conditions, and supply chains that are immune to the kind of external disruptions that we've already talked about. For those of you who join, we offer you a necessary foundation for private financing and secure access to the critical mineral supplies your nation would require in an emergency or some other contingency. By regulating imports to preserve free and fair competition within the preferential trading zone, we will elevate our nation's miners and refiners, our investors and our producers alike. We are all on the same team, and we need to create the economic incentives that reward people for investing and building in our countries. Membership will be vital for developing economies seeking to expand mining capacity. And it'll be just as important for the advanced economies that rely on these materials to sustain their advanced industries, to sustain their growth and security. And I want to be clear with every person in this room. While we believe America's market is large enough to create its own critical minerals trading zone, this entire effort will be stronger and far more competitive if we build it together. So I'm pleased that so many of you here today have already signed on.
So we'll stop there. It sounds like they're recruiting partners for their critical minerals trade zone, which includes silver. And Sean, perhaps you could take it from there and share your thoughts.
Well, look, I think it's really dangerous when the government picks winners and losers and intervenes, and it's disappointing for me to see the Trump administration do this. Again, like you could be maybe surprised by those comments, Chris, because you may think I celebrate the fact that the government wants to put hundreds of billions of dollars into miners through direct investments and debt. But I do think it's troubling. Like, they should just be doing their job. And doing their job means permitting projects, permitting infrastructure and allowing miners in a free market just to go about their business. And so, but again, this is going to create have and have nots. And, we've seen it in the banking system, and we've seen it how it's, what it's done to money and to inflation and to debt levels. And the good thing is for companies like Dolly, we've got what it is they want, right? We've got high grade projects that are in safe jurisdictions. But I do think it's setting a dangerous precedent with the direct investments and trying to put in an artificial price floor. I think the intentions they're what good intentions, but I think there's some unintended consequences that just let the fair market be the fair market is my 2 cents.
I hear you, and that's as soon as I hear price floors or price caps. My studies of economics, usually any sort of intervention exacerbates the original issue. So we will see how that goes. Although I think it shows the seriousness between what Copley said about hundreds of billions to what, and they had Howard Lutnick out giving his own version. So makes you wonder what this will look like in 5 or 10 years, because underpinning this is that to bring back manufacturing, these are things they need. So I don't think they're bluffing here. And Sean, as you mentioned, you are running Dolly Varden Silver, which in the merger with Contango ORE, although while you're going through that process, you continue to put out some drill results and nice readings there. And perhaps you could give us an update. I guess these came out Wednesday morning, and let people know what you came back with.
Yeah, Chris, if you don't mind scrolling down a little bit, there's an image that I want to stop at. You'll see some red. Boom, there it is. So, we've identified, if you see, the red is demonstrating where the ore body is, and that yellow is identifying where we have found a bend in the system. And in that bend in the system is where we're seeing things really open up in terms of consistent, high grade, large, wide silver and gold mineralization, and it's a wonderful ore body. It's super high grade. As you can see, it's very close to surface. The results that we put out were on a gram meter basis, like 200 gram per gram meters on a gold basis, which is two times what you want to see. So it's 200% greater than economic geologists want to see to say, hey, this is a discovery, this is economic. So we've consistently found high grade gold and silver, and these results just reiterate expansion potential and confirm a very, very, very high grade system.
Yeah, and Sean, can you give people an update? I know you have some that you've released and you're also continuing on drilling. If you could just give an overview of the upcoming drilling program, which obviously in a silver market that we just described, I think is going to be quite well timed.
Yeah, look, one of the benefits from the proposed merger, and I should just highlight a date, March 17th, our shareholders are going to go out and vote to approve the merger March 17th. One of the benefits is we go at Dolly Varden from having just a very, very special project. We're in a project that's on its way to 100 million ounces of silver. We've got a million ounces of gold. It's high grade. It's in a safe jurisdiction. We're now getting exposure to three other mining districts. One that's in production, that's got cash flow, one that's soon to be in production. And that's where the drill program is underway. It's at the Lucky Shot project. So Lucky Shot is a project in Alaska, and a drill program started just before Christmas, and we're anticipating some drill results very soon from Lucky Shot. So one of the benefits of the merger, in addition to becoming a larger entity, in addition to the cash flow, you're going to have a lot more news, Chris. You're going to get sick of me. I'm going to be on here all the time sharing all the developments, because we've now gone from one project to four, and we've gone from a $500 million company to a company that's in excess of $1 billion, that's producing, developing, and exploring, whereas we were just an explorer previously. So we're marrying a lot of high grade silver with some exceptionally high grade gold and cash flow. And we're putting ourselves in a position where we are going to be North America's go-to choice for high grade silver gold production, development, and exploration.
Yeah, you might have JD calling you, asking you to be part of his trade zone. I hear they're not getting along well, the U.S. and Canadian government right now. It seemed like Mark Carney tried to trade for the New World Order membership and then go with China, but then the league office refuted that. Now they're sending draft picks back. But in either case, it seems like Sean, and then, I'm being a little bit silly, but that's the stunning part is that all of these governments are doing the same thing and they're all talking about it now, of course, when probably it would have been wise to start rounding up your critical minerals, perhaps like you did a couple of years ago. And last thing I just wanted to mention also, I get your emails on the Dolly Varden mailing list, and I really appreciate the letters that you've sent out. There's been a few of them over the past few weeks, and I think it's great because a lot of companies, especially if you're for people who are new to this, they see the technical and which are important, but also think it's nice the way you communicate with the shareholders, explain what you're doing. I love the videos you send out with your geologist who helps people interpret the drill results. So well done on that. And perhaps any of those thoughts, anything else you'd like to share before we wrap up?
No, I'll just finish with again, for Dolly Varden, we've had with silver having a correction, we've had an outsized correction in our share price. We've gone from $8 Canadian down to 6. So I think this affords a really good buying opportunity for investors. I wasn't out there pounding my chest when we were trading at $8 a share. But I do think, like silver, as silver has come back to its 50-day moving average, I think this is an appropriate entry point, as I do with Dolly Varden, particularly considering all the catalysts the merger, the re-rating potential post-merger. And when I look ahead at March and through May and throughout the rest of the year, I'm very, very optimistic of what that future holds for us.
Yeah, well, I think you've put yourself in a great position for that. And I mean, again, we'll see what happens with the silver price, although I might add that at least as of before we started, we had both China and India at 86, while we were at 76, a little bit lower in London and New York right now. So, yeah, Sean, well, I appreciate that. Great to see you as always. Congratulations on the latest results. And for everybody watching at home, hope this has been helpful. We're going, I would say, plan to continue seeing volatility like we've seen. I understand fully how unnerving that can be at times. I would suggest if you find it becoming problematically unnerving, then often that can be a sign to adjust position sizing. Yet when you have that in place, and remember, it doesn't matter how many ounces your neighbor, the other guy on Twitter has, but certainly a time where balancing things appropriately goes a long way. And with that said, we are going to wrap up for today, but we will see.
Chris, I want to say one thing.
Yeah,
You
yeah,
know,
please.
in terms of price floors, right? Um, you just put up, some information that shows that here in the West, whether it's London, New York, you can sell your silver for $76, or you can take it over to Asia for 85. And so a real price floor would be putting a $90 bid under silver today. That's what the government should be doing. That's a price floor. Metal will continue to leave and go west to east because better price discovery is occurring there.
Well, I mean, for all we know, that could be the next part of the plan. They don't seem to really tell you the full story until it comes out. But I mean, if they're still bidding it up where it's being used industrially, and Sean, the other thing is now we had a lot of selling on that retail level, so we've finally seen retail turn to a buyer, which it's like, how does that affect the supply and the fact that we're seeing the inventories getting drained again, or whatever word you want to use to phrase it. So I think maybe cap off with the answer to your question a half hour ago. What is driving this lower? Anytime silver price doubles in 2 months after it takes 45 years to break through 50, yes, there are going to be corrections. Although I think the fact that we've seen these rebounds and now we're seeing signs of metal tightness again. So I would try not to guess where it's going to be in the next couple of months, but I think if you start with thinking of, all right, 5 or 10 years from now, when I combine all this together, I think if you start there, it gives you a lot of power, and then you can bring it forward if you want. But I think that makes the decisions easier for me. And hopefully this was helpful. So hit the subscribe or share button on your way out. And again, you can find out more about Dolly Varden Silver and how Sean has been positioning the company to take advantage of this. And Sean, that'd be great if you're on all the time with news. It's generally pretty good news when you release it. So thank you for being here too. And we will see you all again next week.
Amazing. Thanks, Chris.